Let us see the next question. On 19th of January, Bank A entered into forward contract with the customer for a forward sale of US dollar 7,000, delivery 20th of March 46.67. On the same day, it covered its position by buying a forward from the market due on 19th of March at the rate of 46.655. On 19th of February, the customer approaches the bank and a request for the early delivery of United States dollar. The rates prevailing in the interbank market on that date are as follows. Spot exchange rate is given to us, and for March, forward exchange rate is given to us. Interest on outflow of the funds is 16%, and for inflow it is 12%. Flat charges for early delivery is rupees 100. First question. What is the amount that would be recovered from the customer on the transaction? The question says that calculation should be made on the month basis, then on days basis. That is the question. Everybody is requested to go through the question, please. Let us have understanding of the question. Again, I am reading the question from the beginning. On 19th of January, that is on this date, Bank A had entered into a forward contract with a customer for a forward sale of $7,000. So from the bank point of view, the transaction is sell of dollar and purchase of rupees. And the amount is 7,000 US dollar. Okay. Delivery on 20th of March. Fine. At the rate of 46.67. So this is the rate. Of course, we understand that this is the transaction of the bank. So opposite is the transaction of the customer. So what must be the transaction of customer? Sell of rupees and purchase of dollar. So at the rate of 46.67 rupees, the customer will purchase dollar and bank will sell dollar. That is the way the information is given to us. Okay. Reading question further. It covered its position. So here the language of the question is from bank point of view. So the bank has entered into the reverse of this transaction. With the customer, the transaction is sell of dollar and purchase of rupees. So from where I will buy the dollar as a bank? I will purchase dollar from the interbank or from the international market. Its position of buying forward from the market due on 19th of March, that is one day ahead, at the rate of 46.655. So this is the rate at which I will purchase the dollar. So 46.655 is the rate at which I will buy. 46.67 is the rate at which I will sell that dollar, and will be able to make a profit of 0.015 rupees per dollar into 7,000. So basically I am expecting to make a profit of 105 rupees from this transaction. This is what from bank point of view we understand. On 19th of February, the customer approaches the bank and requests for early delivery of the US dollar. So the customer says that I want to buy the dollar right now instead of buying the same after 1 month. Okay, 19th of February to 19th of March or 20th of March, that is 1 month. So the spot transaction is entered upon this sell of rupees and purchase of dollar. And this is the spot exchange rate given to us. So this rate is applicable. Okay, 1 month forward contract will be entered upon by default for the purpose of cancellation. Dear students, we understand that this information is of no use to us. This information is not useful to us. The forward contract will be reverse of this. Initially it was purchase dollar, now it is sell dollar. Sell dollar, purchase rupees. So in that case you will be able to get 46.355. This is the amount of the rupees that you will get. And of course, difference of both of them is the profit or loss that you will have on the cancellation. Spot rate is given, and for the month of March, the forward exchange rate is given. Interest on the outflow of the funds is 16%, and for inflow it is 12%. Flat charges for the early delivery is rupees 100. In a way that if at all there is a profit, then in that case from that this flat charges would be deducted, and if at all there is a loss, then this 100 rupees of the flat charges would be added. The question is, what is the amount that would be recovered from the customer on the transaction? Note, calculation should be made on month basis instead of days basis. So over here the question says that say 19th of March, 20th of March, like that, so don't compute the number of days. You may compute that so the interest for the entire month, like that, so the clarification is made to us.